Gold has ruled money for millennia, a rare metal you could trust. But today, both gold and Bitcoin are hitting all-time highs, and that tells us a deeper story. Welcome to Plugged In Crypto, where we break down ideas, news, and charts. For centuries, gold was the final word in money, with empires rising and falling based on it. In 2025, gold trades above $4,200 per ounce, pushing new records. Bitcoin, meanwhile, recently hit all-time highs near $125K per coin. So when you see them rising side by side, is that confirmation or a trap? Gold earned its throne the hard way with scarcity, durability, and universal recognition. Governments once backed their currencies with gold. The US dollar was redeemable for it. But in 1971, Nixon severed that link, ushering in the fiat era. Gold was supposed to shine in that era, yet it became financialized. What was once a hedge against reckless money printing became part of the system itself. Here's the first trap. Gold doesn't move because inflation rises. It moves when liquidity floods the system. When central banks inject capital, that capital chases scarcity, and gold is one of the oldest scarcity assets. In 2025, global debt is ballooning, and several central banks are easing. That same liquidity is fueling both gold and Bitcoin rallies, not just as inflation hedges, but as absorbers of excess money. In other words, gold and Bitcoin aren't rising due to inflation alone. They are mirrors of monetary excess. Gold is heavy and slow, requiring vaults and logistics, absorbing capital gradually. Bitcoin is digital, borderless, and instantly transferable, absorbing capital in real time. When markets crack, capital flees to what's rare, liquid, and outside the traditional banking system. In that moment, Bitcoin outcompetes gold because it moves faster and scales globally. Gold's price is distorted by derivatives. Paper gold markets dwarf physical gold by 100 to 1 or more. Owning gold via an ETF is not owning physical ounces, decoupling real demand from price. Thus, gold's safe haven signal gets dampened. Meanwhile, real economy scale and sanctions expose gold's physical limits. Bitcoin, by contrast, moves across borders without customs. Bitcoin takes what gold did well, scarcity and neutrality, and upgrades it. Its issuance is predictable, a 21 million cap, halving every 4 years. Transactions are public, verifiable, and censorship-resistant. Critically, Bitcoin is liquidity-driven scarcity. Every time central banks ease, they light a match under Bitcoin's demand. Bitcoin becomes the outlet for excess money in a world drowning in debt. When gold and Bitcoin rally together, it's more than just inflation hedging. It's a signal that the very foundation of money is crumbling. Debt leads to printing, and printing inflates assets. Then comes the inevitable reset. Gold used to be the reset, but today, Bitcoin is the escape valve. Gold traps liquidity, while Bitcoin transmits it. Capital is migrating, from vaults to wallets, from bars to bytes. For older generations, gold feels safe and tangible. But that safety is an illusion if the system behind it is decaying. Younger investors see gold as static and trapped. Bitcoin, though volatile, feels alive and dynamic. It's trustless, open, and captures the spirit of digital freedom. The story is unfolding right now. Gold is hitting record highs, and Bitcoin is reaching all-time highs. Central banks are easing again, and debt levels are unsustainable. This isn't just a rerun. It's a new monetary regime revealing itself. Gold signals distrust in fiat currencies. Bitcoin signals the breakdown of the monetary system. One is reactive, while the other is proactive. As CBDCs emerge, gold's role as a parallel currency weakens. Regulations and scrutiny erode the safe in safe haven. Institutions are noticing this shift. ETF flows are tilting toward Bitcoin. Gold might persist, but as a relic, not the main narrative. Bitcoin doesn't need to replace gold. It just needs to be the preferred layer of money. Gold will always exist, but it no longer tells the story of value's future. Bitcoin is volatile and contested. Yet it's where liquidity hides when the system falters. So when gold and Bitcoin rally together, don't confuse correlation with causation. They're not just battling inflation, they're revealing the failure of money itself. Gold preserved wealth in the industrial age. Bitcoin protects sovereignty in the digital age. Gold was the safe haven of the past. Bitcoin might be the truth of the future. If you enjoyed this content and would like to see more, please like and subscribe, and hit the notification bell to stay plugged in.